Okay, so quick introduction. If you guys watched the last podcast, you know who we are. Thomas Plotzman, you are investment manager at Lindenham, and you're also the lead on the monitoring team, correct?
Yeah.
So could you please just briefly tell the people a little bit about yourself?
Yeah, so we did a podcast in April. My name is Thomas. I've been working with or at Lindenham for about 2 years. And then a big part of my role is the monitoring of the current portfolio. So I'm in touch quite a bit with all of our partner companies. I think a couple of them actually joined, so thanks for joining. We appreciate it. Yeah, and I think what I realized is because we're active in quite a few different countries, and because we talk to a lot of our partners on quite a regular basis, we get a lot of insights from those countries that you might not get if you're just here based in the Netherlands and investing through the London platform. So we thought it would be a good idea to share a little bit of the sort of the more scientific information and the research that's been going on during COVID, as well as maybe some of the more personal or business-related stories to give you a better understanding of what's happening both at Lanahan and at all of the partners.
Yeah, exactly. And so I'm Lucas. I work on the growth team at Lindenham. I've been here for about 3 years. Well, almost 3 years, I guess. Yeah, basically, so I help with all the marketing and the new investor acquisition, but then also work with the products, try to make sure that we're making existing investors happy. And like I said, we always try to monitor the feedback and see what it is that you guys want. And the number one request by far was another update on the COVID situation. So we put together this slide deck, and we tried not to put too much information in each slide. We tried to have it just a little bit kind of brief in the slides, but have a bit more discussion on each one. And the first thing that we're going to start with is we asked people via social media and the newsletter to reach out with whatever questions that you have before we had the webinar. So we're just going to go ahead and start with these. The first one is, how are you coping with the pandemic? And I think we can kind of take this one from a bit of a Lindenham perspective. And yeah, so I think we mentioned back in April when we did the first the first COVID update, that at that time everyone was working from home. We were in total lockdown. It wasn't as bad of a transition with Lindenham as it could have been, or definitely probably was for other companies, because Lindenham is always flexibility, I think, has always been one of the best features of working for Lindenham. So we had a lot of people who were already used to working from home a couple of days per week. A lot of people who live outside of Rotterdam. So everybody, we're an online platform, so there's not a lot that we can't do just with the computer. And then we obviously started utilizing Zoom video and these different video conferencing tools much more. We had to figure out better ways of project management and stuff like that, because you really can cover over a lot of weaknesses with meeting people in person. And if you're not quite as organized as you should be, you can I think overcompensate for that when you see people every day. But then all of a sudden, once you're working from home, you really have to be organized and clear in your communication. And then of course, that's what we talked about last time, is how busy you guys were for probably the first 2 to 4 weeks maybe. And so I think you can talk a bit about briefly what we originally did with the pandemic, and then what we've kind of started to transition to now, investments wise.
Yeah. So investments wise, I think especially in the beginning, that's what we talked about during the first podcast, is it was quite difficult to find out what was going on in each and every country and for each partner. So what we were trying to do is just as quickly as possible get an overview of what was happening in each and every country. But at the same time, because it was changing so rapidly, you would have information, and a week later everything would have changed already, or there would be a complete lockdown.
Right. Yeah.
Before there wasn't anything there. Then internally we discussed, as probably all of you have seen, to put sort of the projects on the website with a slightly higher interest rate, mostly to make sure that no cash was leaving those companies, because of course it was for at least I would say almost all of them, it was quite a difficult period, and it's not over yet. So what we were trying to do is as good as possible to support them and to make sure that they could continue their operations. But at the same time, we decided not to increase the exposure, at least for the time being, because we first wanted to see what was going on and what the real effects would be. I think at this stage, so we're a few months further. I think it's probably one of the questions later on as well. But I think now we see more of a difference between our partners or investees. So I think there's a group that has been struggling quite a bit, depending on the lockdown and the type of the business. There's been a group that I think has been doing fairly okay, and thus far we've continued as in line with the original strategy. But I think there are definitely a few that are really picking up again, or have actually performing better during the pandemic. And I think we'll get to that in a little bit when we discuss the separate countries.
Yeah, and I think one of the themes from the first update was that the situation was kind of totally unknown everywhere. It wasn't, and I think a lot of the problems that we discussed that the investees were facing in emerging markets were the exact same problems that companies in the Netherlands were facing at the time, and still are. I mean, imagine if you had crowdfunded a bar or a hotel or cafe, something like here. I mean, in Rotterdam, it's been up and down. I mean, you never know what the government's going to announce next, and I think the hospitality industry has been hit very hard. So they're not really unique problems there that they're facing, compared to what we are here, except for on a small scale. A few of them are kind of unique. But I think we'll also discuss that in one of the next slides, is that we at that time there was just so much unknown, and there was of course a lot of concern, but try to have intelligent concern, not paranoia or anything like that, about what would happen in these markets, because all we could do is listen to the experts and what they predicted, people in the news. And at that time the thought was that emerging markets could be hit very hard, and they obviously didn't have those first waves of people coming over into these high tourist areas like you had in northern Italy and then New York City and places like that. But there was a lot of concern at that time of what would happen in emerging markets. And so now, it's good to actually have a bit of time removed from that to be able to see a little bit more clearly, but it's still so many unknowns. I mean, I think Tuesday, Ruta is supposed to announce, new stuff for us here. So it's just kind of one of those things that we adapt to. And if you look at the third question of how are you preparing for the post-pandemic future, I don't know that that's really something that we feel like we can prepare for yet, because who knows when post-pandemic actually is. So, I think it's something that we just try to monitor. And I think, our CEO Koen does a really good job of monitoring what the government says, and then, trying to kind of keep us updated as quickly as he can. And he tries to think about that stuff, looking into the future of what do we need to be paying attention to? What can we kind of protect ourselves with? But he's just doing the best he can, like everybody else, because it really still is such an unknown world. The second question, have we lost any partnerships because of the virus?
Yeah, so I think it really depends on how you define it. I would say no, we haven't lost any partnerships, but in some cases we're not able to offer new projects on the website because it's not going that well. And I think depending on which companies you've invested in, we've also received some emails from Lendehand with partner updates, especially the ones that are not doing that great.
What about the one in Georgia?
Not sure.
No, okay.
What you're referring to, but I think, for example, a good example is Milab that we'll talk about a little bit later on, because in India they had quite a severe lockdown, and some central bank policies that were quite difficult on the company. So you can. So I think we didn't lose the partnership, and we're actually talking to them on almost a weekly basis. But of course, if a partner is not on the platform right now, we still have the partnership, but we're not really able to use it currently.
Yeah, so we haven't ended any relationships because of the pandemic. And then the biggest challenge, I mean, I think that one's for you, obviously, because I think that's been the investment side has definitely been the biggest challenge, I would say. But that would, in the beginning, probably was having to cope with so much so fast, with only 24 hours in a day, right?
Yeah, I think in the beginning, definitely, because I think we're active in about 20, 30 different countries. So then to be able to know what was happening, and you were saying even this week we'll get new updates in the Netherlands, and it's similar in other countries. So that was, I think, the main challenge, to really understand what was happening on the ground in every single country. And of course, we don't really have the opportunity to travel right now. So normally you might be able to do a sort of a short trip and visit quite a few partners and really see what's going on. Right now, that's more difficult. I think we're definitely moving towards a more digitalized way of still doing that, and having longer calls and video conferences where we can still get elaborate updates and talk to different people within the company. But I think I would say that's probably one of the main ones.
Yeah, for sure. And then do you see a shift in demand from investees?
Yeah, it's a bit of a difficult question, because we do see changes, of course, depending on, I think even in the Netherlands, like you were saying, not every industry is doing great. And if you
most industries aren't doing great.
Most industries, I think if you're giving loans, it really depends on the industries you're funding. Also, if you sell products, I think in some cases there's actually a bigger need for those products. So yeah, there we see change because they're doing better. In some cases, they're not really, especially financial institutions are not able to offer new loans, or didn't want to offer new loans until they have had a little bit more clarity on, how these entrepreneurs were doing. So in that sense, there are changes, but I think there's still, especially going forward, a lot of our partners are picking up again. So I think in some cases it's temporary. In some cases it might be a little bit more long term. So there are definitely some changes, but I think we'll be able to continue.
Yeah, it was
large group.
It was a tricky situation in the beginning, because you're kind of having to balance the two sides of that fence. One side being, if you watched like the financial news channels when the outbreak first started, it was that what a lot of banks were afraid of was kind of a run on credit, just in case that, all these people start saying, oh, disaster's coming, we need to get financing just in case anything bad happens. But then you can't just go out and give a whole bunch of credit when all these risk factors, just totally changed. So you have to do all this reassessment and stuff like that. And then on the other hand, one of the biggest problems a company is going to face, especially the companies that we, finance here at Lend a Hand, is, a shortage of capital. So if you're one of the, creditors that actually causes a company to not have enough funds to continue operating, that's not going to be good for the business long term, obviously. And you don't know if you're creating this extra burden on the company that, maybe they would have been fine during the pandemic, but you just kind of caused them to have, a capital shortage. So it was a very difficult, especially when we talked about this last time of, our investees do consider us to be kind of partners. Like we do try to, be flexible and supportive when we can, and because we are an impact investment, firm. So that was really, I think, difficult for you guys to manage. And I think that the compromises of course, like we said, the risk factors changed. So you introduced the little bit higher of an interest rate, and then also the kind of cap on, no new partners for a bit until we kind of were able to see how some of the, circumstances played out. I think you guys did a great job of trying to kind of balance that shift in demand to make sure that, you are there for people when they need the capital, but then also that, our crowd is still, being protected in the sense that we're behaving responsibly, as an investment platform. On the next question regarding crowdfunding, did you see any related increases or decreases in people's willingness to support projects? We definitely did in the beginning. In March, I think people were kind of like, whoa, we want to hold on to our money for a bit and see how this plays out. I think we all did that, no matter, what our preferred investment vehicle was. I think cash was king at that time. A lot of people were trying to, even shifting into USD to try to, just protect their assets as best as they could. But it didn't take too long, I think, for it to kind of get past that level. So I think March was definitely our lowest number of new investors for probably 2 years, maybe. April wasn't great, but April you saw a bit of an uptick. And then in May, it kind of started to get back to not normal yet, maybe at that point, but it started to recover for sure. So I think you saw March was like, people were terrified, we were all terrified. Like, if you remember the stuff that you used to be afraid of back in March and what you would see if you turned on the news, it was could be the end of the world kind of thing. So we expected that for sure. And then it's not like we were out there trying to market to people saying, no, definitely invest your money, during a global pandemic, like we know what's going to happen. So we were expecting that, and that was fine. And then, it has gotten to be, I would definitely say that now it's difficult to gauge because, like Thomas said, there's not as much, I guess there's not as many projects available now, and the sizes are reduced because we've had to restrict the amount that we could, let people borrow. However, I do think that there's probably still a decline from pre-pandemic levels, but it's healthy enough. I think we're very pleased with the activity that people, have had. And I mean, we didn't know how it was going to go. You don't know where Lindahan ranks on people's priority lists when it comes to their assets and what they're going to invest. But we've seen that actually people still, believe in, financing companies in emerging markets, even when times are tough, which is great because that's probably the moment that they need it the most. But of course, we don't want people to be reckless with their money or feel like they're just, going to put it in an investment that is definitely going to go away. So it was a difficult time to navigate, but we're quite happy with the way that the crowd, I think, has responded, been very resilient, very supportive. We even did an entire crowdfunding campaign for ourselves in that time that was funded. So I've been very pleased, I think, with the response from our crowd. Going to go ahead and flip over to the next slide. But like we said at the beginning, any questions that you have over stuff that comes up, feel free to put it in the chat, and then Lily will kind of ask those as she sees fit, especially because sometimes a lot of similar questions will be asked. So she'll try to group those together. So a lot of information on this slide, but don't worry, we'll kind of slowly digest it. But what we thought would be good is to kind of start off with a little context, because if we go through in all these slides and we're just telling you random facts about each market, and you don't really know what the situation is there, then it's kind of difficult for you to know, like, how bad is the situation. So the good news is that, like we said, in March and in April, we thought it was going to be a lot worse in emerging markets than it has been. That has been, a surprise to not just us, but I think the entire world has been surprised by that. I put I meant to put the actual link so I can do that maybe in the comments later, but to this is a very recent news article from NBC News about the resilience of emerging markets when it comes to, I'm going to turn a bit so I can read it, when it comes to the emerging markets and the effects of COVID. So if you take as an example, Uganda, where we have the statistics in this table, back in April, they were projecting 600,000 cases and 16,000 deaths by September. And if you look at their actual stats, it's 7,000, confirmed cases and 70 total deaths. So that's kind of a, just a small picture of what the expectations were of how bad it could have been versus, how it's actually been. So obviously, all deaths are too many deaths, but it could have been a lot worse. So some of the reasons, scientists are actually studying the emerging markets quite heavily right now because they want to be able to take these lessons to other places in the world that haven't done so well, US, but anyway. So aggressive measures early have paid off large dividends for these emerging markets because, like we said, they did not get hit as hard as early as places like Europe and the US did. So they were able to kind of, when they did their lockdowns, that was actually much earlier as far as how many people there had been infected than when we locked down in Europe and the US. So by them locking down so early, that was actually a big key in them keeping that spread limited. And then also, some African countries are just much more used to this when you're talking about pandemics and outbreaks because at least epidemics, because they've had these before. When you talk about outbreaks like Ebola, that's a very dangerous situation that much more deadly. And so they've actually have experience with things like this. And so when you have processes in place, it actually gives you a big head start. And then actually, in general, the population in Africa is quite young. So COVID is a disease that, overwhelmingly affects elderly people much more than it does younger people. And if you look at that stat, about 3% of the population in Africa is over 65 years old. So that's, a huge blessing for them in this situation, because I think that's why you see relatively in that table that the deaths are fairly low. And of course, that's the thing that matters the most is the death number. What I think jumps out from that page is obviously India and South Africa. So India, I mean, is the second largest country in the world. So it would make sense that, I mean, their numbers are going to be higher than everybody else on this list. But yeah, you have a lot of population density in India. It's also, has a very large population that lives in poverty, doesn't have access to good healthcare and these kind of things. So that's a difficult situation for them to try to manage. I think they've been trying the best that they can, and they're trying to work through it like everybody else. And then South Africa, I think they've definitely been hit the hardest in Africa. So you see there the almost 700,000 cases and 16,000 deaths. However, to give you some context, that death rate per capita is actually half of the death rate in the US. So while South Africa has been hit, fairly hard compared to the other African countries, they have managed it okay. It's not, it's not out of control in the sense of like it's disaster. So we'll read more about South Africa in the coming, slides. But so like I said in the beginning, relatively, much better than what we expected back when we did the first update in April. If you look at Africa as a whole, so, like I say, obviously everything's relative when you're talking about what we expected 4 months ago and kind of World War Z, end of the world type stuff. But still, I mean, terrible effects, of course, on a lot of, people's lives. So 40 to 60 million people are expected to be pushed into extreme poverty, and 100 million people into poverty. Hundreds of millions lack access to healthcare or clean water. And then 150 million jobs across the continent are at risk. And then if you look at those vulnerable populations, the low and moderate income households, 78% have either lost their jobs or are earning less. 65% are now depending on their savings for survival. And then, of course, the biggest concerns are food scarcity and loss of income. And so I think what you'll hear is kind of the central theme throughout this update is that the health concerns were much better than we expected. However, the economic consequences are still very terrible because if you're talking about the economies of emerging markets, they're obviously dependent as well on the more mature economies. And when you have, recession nearing depression levels, in the US and Europe, that's obviously going to have a knock-on effect to other economies that are kind of dependent upon trade and these types of things. So definitely the socioeconomic and just economic, consequences in the emerging markets has been, of course, pretty severe, but, not all caused, of course, by their own health problems. And I think so that's what we'll see going through. If we look at, so we've decided to break this up by regions. The first region we're going to cover is Southern Africa, and specifically South Africa. So they went into a severe lockdown on March 26th, and then they continue, like we said, to have the highest cases and death count in all of Africa. They, of course, did declare a state of disaster to try to, enforce that lockdown and make sure they were doing everything that they can. Over 3 million jobs lost to date. And if you look at the unemployment numbers pre and post-COVID, that has gone up from 30% unemployment to 50%. So huge consequences in South Africa. Economically, and something that they're, of course, trying to, figure out every day like the rest of us. So Thomas, you want to talk a bit more specifically?
Yeah, so I think one of the things we wanted to do during this webinar is to give some examples. And I think we'll be mentioning a couple, for example, for South Africa that are also applicable to other countries, because I think quite a few things are happening in different countries. We won't be discussing all of our investees or all of the countries, but it's just to give you a bit of an insight of what's happening in those places where we're active. And I think specifically if you look at South Africa, so like Lucas was mentioning, the lockdown was quite severe. They, even in August and September, were still in a state of disaster. There was a ban on alcohol, I think twice actually.
Yeah.
And then I think in terms of, so there's, so the first bullet there is central bank strategy. So what happened in quite a few countries is that the central bank basically told people, if you have a loan, like you don't have to repay in the next 3 months, because if there's a full lockdown, you won't be able to run your business and you won't be able to repay anything. But then for our partners as financial institutions and giving out loans and then expecting repayments, because that's basically our business model, if the central bank says no one has to repay for 3 months and it's broadcasted on national television, of course that will have an impact. And I think that's also where you see that for example, if you look at the investee-specific ones, software structurings, or 40 to 60% drop in disbursements. So how investees or our partners reacted to that is, for example, offering basically a payment holiday, or offering them not to pay for the next couple of months or only a little bit, because a lot of these SMEs, they weren't able to operate their business just because there was a full lockdown. But then if the lockdown is lifted and they're able to reopen their store, for example, or their business, they would be able to start repaying. So that's why actually quite a large number, we got some sort of arrangement on their loan or on their repayments. Also in terms of disbursements, because you don't really know what's happening, especially in these first couple of months. I think it's difficult to just give out new loans. So I think that's why a lot of our partners, and that's why we were a little bit more careful as well. Then if you look at South Africa more specifically, there are a couple of rating agencies. One is Moody's. The other important ones, they had downgraded South Africa as a country or a macroeconomic level. Moody's were sort of planning to do it, or was unsure if they would. They extended that a couple of times, but you saw as soon as COVID hit the country, they were downgraded, which also means that it's difficult. A lot of foreign investors stepped out of the country. There were a lot of outflows of basically of cash or investments, and of course, and this is also something that happened in a lot of countries, is that the currency devaluated compared to the US dollar. The US dollar was quite strong, even though the policy in the US was in the news a lot and wasn't always very successful. So those are a lot of things that you have to take into account, because if you get, for example, if you get your income in local currency, but you have to repay your loans in US dollar or euros, that's going to have an effect on the repayments.
And are you saying this as a natural consequence that their currency devalued against the dollar, or that they did that themselves?
No, so this is what happened. So in the market, and of course there are a lot of different factors that influence that. Because I think the US dollar is still one of, or probably the main currency in the world. So what you saw in some countries is that everyone was concerned that this would happen, so they would start exchanging their money for dollars, and you mentioned this as well. And of course, if that happens, there's a bigger demand for dollars, and it stays quite strong as a currency. But it could have also happened that because of the things happening in the US, that the US dollar would have devaluated as well. So it really depends on the dynamics. But in this case, we saw that, especially in the first couple of months, that's something that happened. And then some companies have a lot of tools to basically hedge that risk away and to make sure that risk is very small, but then other companies don't. And sometimes to be able to do this, it costs a lot of money,
right?
Because if you do this through a bank, they don't let you do it for free, especially if they think it's a risky.
For sure. And then also on the soft restructurings, that's a bit of what we were talking about before, right? Is that if you think that a company's long-term business prospects are still good, and you think that, okay, if we just give them some more time and some flexibility, then once the lockdowns are over, they'll be able to recover. That's what you're talking about, right? Is kind of trying to give that flexibility. Yeah,
exactly. Because it's basically, if you have a lot of clients, are you willing to help them out, or do you say, well, we'll need those repayments, and you just see how?
You don't care what happens. Yeah. Okay, good. I think that's clear. All right. So Zambia, 69% of micro and small enterprises reported a drop in business income. So a lack of adequate health, water, and sanitation services may pose serious challenges for effective infection prevention and control. And then manufacturing, mining, and other commodity supply chains have been interrupted, which can result in job losses. So these are all, again, more on those economic consequences that these countries are facing. And then if we look at Mozambique, all 11 provinces reported COVID cases. As of September 7th, President Nyusi declared a situation of public calamity with a red alert for an indefinite period. And the main issue there was the food scarcity. So I think food shortage in a lot of these places was already a problem before COVID. And then now if you add on to this with the global supply chain disruptions and things like that, that became a scary situation in quite a few of these markets. And so now you're going to speak a little bit more specifically on these, Mozambique and Zambia.
All right, yeah. So we have quite a few partners in Zambia, both in the off-grid energy space as well as microfinance. And we also frequently talk to potential new investees or just different companies that are active there. I think in the beginning, it was interesting to see that there were definitely differences between types of businesses. So for example, healthcare or local traders were actually doing quite well, whereas other industries were not doing well because of lockdowns and because it wasn't that demand for certain products. If you look at the export, so the export definitely slowed down. I think Zambia is a large copper exporter. So I think about 60 or 70% of their GDP comes from exporting copper.
Wow.
So if, for example, the construction sector worldwide
right.
is not really doing anything, then all of a sudden there's a huge decrease of demand there, and that's a lot of people. That's a lot of jobs and people sustaining their families.
Yep.
With those incomes. I think you also saw there were a couple of things that you saw that were similar to South Africa, such as the bank offering a moratorium, basically this 3-month holiday. Just generally, the currency taking a hit in the first couple of months. It's also interesting, and that's maybe a dynamic that's good too, because you already mentioned it a little bit, that especially I think in the off-grid solar space, there are a lot of companies that are not profitable yet. So what they do is they need funding, both equity and debt funding, and then they use that to increase the amount of sales and get to a point where they break even and they're profitable. And of course, that becomes a problem if all of a sudden you cannot reach those sales numbers.
Right.
So if you're planning to sell 5,000 systems a month, and now it's very difficult to go out there and sell things or to even collect repayments, then that has a huge effect on your ability to repay those loans and on your ability to grow. So what we saw there is that Lenhead as a partner, but also other funders, it was very important to go into discussions early on to make sure that this is the same as with the smaller SME, that if you don't have any income, that you don't have like zero or very low income, but then very high repayments. So I think that's why we sent out quite a couple of emails where we had to do something like this.
Right.
But in general, I think especially impact investors all looked at this because you want to support partners on the short term so that they can go back to a healthy level of sales and then continue their business.
Yeah, and I think it's important just maybe because we also discussed this in the last podcast. But basically, if you think about these companies that sell the solar home systems, they rely entirely on direct sales, like in person, people on the ground, going into these communities and these villages, and talking to people, showing them the units, and then the repayments. Oftentimes they're made digitally because they do have a lot of sophisticated digital payment systems there. But it's already something that you're talking about people who don't have electricity, so they're not rich. So I mean, for them to normally, that's part of the business model for these companies to try to survive and be successful is can they can their customers make the repayments consistently? And so I think all three of us have actually visited some of these solar companies in Africa, and it's usually younger people who they go into these villages and they'll have these relationships with people, and also sometimes when they need to ask about repayments or something like that. I think Lily, did you guys go to Cameroon together? Yeah. So one of the things you guys said when you came back was that a lot of people didn't when a thing would a solar unit would kind of break down, they just would maybe not even be so used to having it that they would just let it sit there, and then of course they're not going to make the repayments because then they can't, it's not working, they can't get electricity from it. So if something like that happens during a pandemic when no repair person can come to your house to fix it, that's just kind of stuck. There's no revenue coming in from that anymore.
And I think and something because what you mentioned is I think it's correct that in a lot of countries they they really rely on this relationship with sort of the field officer.
Yeah.
And they normally, maybe even though they have the opportunity to pay digitally, they would still prefer to do it through an officer that they trust.
Yeah.
And I think in a lot of countries, energy was an essential service, which meant that even though there was a lockdown, that they were still be able to go out and offer services. But of course, also depending on the number of cases, the partners wanted to protect their personnel.
And also, do you want to let somebody into your home, and
exactly,
all this fear is going on. So yeah.
So that had a big effect.
All right, and then there was something else that you mentioned that I wanted to cover, but now I forgot. Okay, all right, we'll move on. Lily, our producer, says we need to move on. Okay, so Kenya, around 27% of households are suffering from food shortages. As we said, before, that's one of the biggest problems. 75% of the country's SMEs could face collapse without funding assistance. And then the expected GDP growth in 2020 is now down from 5.7% to 1%. Again, that's a common story, in economies across the world. And so, yeah, if we now.
I would just be cautious at the time. I would keep it a little bit shorter. I think something that I found really interesting to see is that on the demand side, especially for solar home systems, or in general, like off-grid energy appliances, we saw that, or our partners told us that the demand was actually there. So they were often a little bit more cautious because, of course, you don't know what the long-term effects will be. But we saw that people still wanted this because they spent a lot of time at home. They actually wanted the light and the energy. But I think even more importantly, they wanted TV systems. And if you look at Kenya and Uganda, the schools were closed, will probably be closed until the end of the year. So that's, I think, since March. So that's almost a year that you have your whole family at home and there's no way of educating them. So specifically in Kenya, what they've been doing is they've been offering, like online, or basically they've been broadcasting different educational television shows. And what we're seeing is that it's actually people that have a TV system that runs on solar energy. They're more likely to keep paying because it's such an important source of, both information, but also, I think, entertainment. Because if you spend a lot of time at home and you're not able to move, it's really nice to be able to have some entertainment and to follow the news and know what's going on. So I think that's very interesting that in a lot of countries, there was a bit of a drop in the beginning because not everyone was able to pay. But at the same time, energy and having a television set is such an important,
And I think it's also important to remind people that in a lot of these places, they may even have like some access to some form of an electrical grid, but it's highly unreliable. So these solar home units are actually the most reliable way that you can power things like your television and stuff like that, because you're much less likely to actually lose, the electricity from those units than from the ones connected to the grid. So a lot of these people saw this as like a secure way to make sure they have access to information. So I think that was a good thing about the solar home units specifically. I remember the thing. And guys, just to remind you, if you have stuff to do and you need to leave the webinar, you can always watch the recording. So everybody who's registered, you will get a link to the recording, and then we will also upload it to YouTube after this as well. So don't feel like, if we're being a little long-winded, don't feel like you have to sit here. If you have other stuff you need to go do, you can always come back and watch the recording. But we want to try to make sure that we get as much information out here as we can, because we don't know when we'll be doing another one of these updates. But the thing that I forgot was I wanted to stop and see if there are any questions yet that you've collected that you would like us to address while we're kind of midway through here.
Yes, there's one question from Alicia.
Oh, wait, first. Talk.
So she has a question about Colombia. She's not sure if we're going to address Colombia. So if not, what is the situation in Colombia and our partners?
Yeah, that's a good question. We're not addressing it here because we have one partner in Colombia that is called ECLOF, and they haven't been an active partner for a while now. So I think because of that, because most of our investees are active in other countries, we're not discussing it more elaborately. But I think, especially if you've been invested in Colombia, so our partner ECLOF, they have, compared to other partners, a relatively low amount outstanding because I think they've been repaying since 2018 and haven't been doing any new projects. But yeah, they also suffered, like they're relatively smaller microfinance institution. They also suffered from the pandemic, and we sent out some updates on them. But we're currently discussing like what the best way is to go forward together with all the other financiers.
Yeah, and if you have any specific questions over something that we don't cover here, you can always email us at info@lendahan.com. We'd be happy to get back with you and help you out in whatever way that we can. Okay, now moving to Uganda. Were there any more that you wanted to ask?
Yeah, also, if we're moving to Uganda, our first question was from Gerard. He asked, last week a project was announced in Uganda, duration 1 year at 4%. It was fully funded in 2.5 hours. If the loan was offered at 3%, the funding time may have been longer, but the default risk lower. In my opinion, a low default rate is in interest all parties, meaning interest project is too high.
Got the tough questions for you today.
Yeah, that's an interesting question. Actually, we get this question more often. I think for us, it's very important that the interest rate reflects the risk. And also
to the extent that we can have it reflect the risk. I mean, it's not going to reflect the full risk, of course.
No, of course, yeah. So we try to make sure that exactly that.
What I mean by that is that's where the impact part comes in from the impact investing. Is that you guys always clearly know that these aren't the high. If we were fully reflecting the risk level of some of these companies, the interest rates would obviously be much higher. And so I think that's what's difficult for you guys is to how do you balance that.
Yeah, no, exactly. No, that's a good point to make. But I think, in general, we're not trying to disturb the market.
Yeah.
I think we are, quite fairly priced if you look at the average in the market, and also if you look at other lenders. And I think a really important part of Lendahan is we're trying to offer loans at fair rates in emerging markets, but we're not trying to give them free funding. So these are businesses that have a valid business plan that are doing a great job, and that we and that have a funding need, and we're trying to fill the funding need, but we're not trying to disturb the market, or we're not trying to become sort of an NGO that has a very different scope and would be able to do very different projects. So I think for us, maybe to conclude, so for us, the most important part is not how quickly can we get it funded, or how low can we get the interest rate. We just want to make sure that it's a fair interest rate, that it reflects, as good as possible the risk compared to our general portfolio.
Yeah, we do try to monitor, what I think funding speeds are compared to, I guess, appetite for specific, investees and projects, because obviously we need to know what the appetite is from the crowd as far as maturity dates and interest rates. But that's never something that's, I think, taken into account on your side. It's more of you guys do that on the investment side, try to analyze things that you need to analyze, and it's not really something that kind of crosses over in that way. Any more before we move on to Uganda?
One just came in from one question just came in from Brooke. Can you say how many investees you have, direct and indirect, across all markets, and how many of them have faced repayment problems this year due to COVID or otherwise?
Maybe we can save that one for the end, just because we have a couple more specific investees that we want to, you can do it right there in the first one, that we just want to address. And then I think we can have a bit more of a general discussion for people that have those questions. But good question, thanks. So with Uganda, just a couple of points here. They were actually self-sufficient in producing a lot of healthcare supplies, such as, hand sanitizer, disinfectants, and PPE. That was obviously a huge advantage in the sense that a lot of, countries had a shortage with that. So if you're not having to import it, that was a big help health-wise. The government, I think, actually pretty early on started looking at the, possibility of remote learning through radio and television, as you mentioned before, because that's, one of the biggest problems is how do you make sure these kids still get access to education when they can't go to school. And then they were, faced, of course, with other supply chain disruptions, just like, everybody was. And then also global demand weakening for their exports. That's also, a big hit to them as well, economically speaking. And so now.
So a couple of things we saw in Uganda. So Uganda had a very strict lockdown. And what we heard, for example, from suppliers in the off-grid space is that at some point they only had 10 or 20% of their normal income. Also, schools, just like in Kenya, were closed. One of our investees did have, quite a few schools as a borrower. And what they were telling us is that, this is, I think, a typical example of basically a borrower that is able to repay as soon as they reopen, because then you have the school fees. Everyone still needs to go to school, so it's more or less similar. But as long as they're closed, it's very difficult for them to make repayments.
Mm-hmm.
So that then has an effect on how much income you're getting and how good the portfolio is looking. At the same time, what they also did is to focus more on other industries that are doing well right now, and you wouldn't necessarily give additional loans to new schools at this point, besides supporting the partners you have. I think also here what we see is that I think our partners in Uganda have been doing quite well. I think one important thing that we quickly touch base on is the how important it is to have good shareholders and to have good funders. And what we saw is that in some cases, there was a lot of faith from the shareholders in the company, and they were able to inject additional funding, or lenders were able to give them a payment holiday or a restructuring and be more flexible on the repayments. So then that makes the company much more dynamic. And then if they have a good strategy to get through that lockdown and then build up from there, it really helps because they have very limited outflow of cash. They have maybe some additional or disaster funding or just normal loans or shareholders stepping in.
And you mentioned before we started the webinar that some of these companies whose main focus for like their revenue were schools, obviously had that effect, because now with the schools closed, you lose your biggest customers. However, you said that some of those companies have actually been able to successfully go after other sectors besides education, and then actually be able to expand their portfolio a bit in that way.
Yeah, so I think it's I think most of the partners they're active in, especially on the lending side, they're active in different industries.
Mm-hmm.
Because you don't, or in most cases, you don't want to just be exposed to one industry. And then, of course, if that would be hotels or restaurants, that's a huge problem for you as a company as well. So I think most of them have different industries, and then you can sort of naturally see which industries are doing better. And at first, they were holding off on dispersing or giving new loans to new companies. But then if you see that certain industries are actually doing well and there is a need for funding because they're selling products, then of course it's easier to increase that percentage of your portfolio.
Right.
And because you grow the portfolio and you don't increase the other part, then directly that becomes a smaller part of your company.
Okay, so next up is Cameroon. Chronic poverty obviously is something that, like we saw with India, it's going to make something like this much more difficult. And I think that was a big problem there because they had very limited access to testing services, which, as everybody has heard, obviously in the news over and over and over, how critical testing is when it comes to these types of situations. And then also, the fragile healthcare system, they did kind of have a large number of healthcare workers infected towards the beginning, which kind of rose a little bit of concern there. But again, I don't think that was I think they handled that and they were able to kind of mitigate that with not too huge of an impact. And then you're going to go ahead and speak on some of these. So this is something I mentioned earlier. So they in Cameroon, we have one part in Uganda there. They were classified as an essential service, just even before there was any discussions about potential lockdowns. So that was good because they were able to go into the field and collect. And as you already mentioned, in Cameroon, it was quite important to be able to physically see people. Of course, they did take a lot of measures. That we're not really spending a lot of attention on right now because I think we sort of take that for granted. But I think it's important to mention that for all our partners, their staff and their clients were very important. So they took a lot of measures in terms of making sure that everyone was working in batches, that they had all the materials like to sanitize
their hands or potentially masks. And I think it's important to mention that even though they were going out into the field at such a difficult time, they did take a lot of these measures to make sure that they could do it as safely as possible. What was interesting is so they closed the borders to tourists, not to goods, so you could still have products coming into the country. But actually, a lot of especially in the off-grid space, a lot of the clients kept repaying. So of course there was a bit of a dip, especially in the beginning, and it depends on their jobs and how much they're still able to do. But we did see that they were still able to grow, to sell new products, and to collect quite a large proportion of what they expected to collect from their clients. So that was actually much more positive than we expected at first, and it was interesting to see that it's such an important product that people are still repaying, and that in such a difficult time they're just able to.
It's quite a stress test. You just get kind of a stress test for so many of these companies and industries, just to see what the consequences would be of something like this. So, if we look at Ghana, so you may have heard the term of pooling test, which is basically where instead of just testing every single person, you test like groups of people, you take samples out of each group, and then if say one of those people tests positive, then you go and you kind of start to lock down like certain sections because of it. And so they started doing that fairly early because they knew that they were, going to have to be careful about the testing supplies. And then I think they were the ones, so they also, I guess the government kind of asked people as much as they could to try to cut energy and electricity. And so they were actually able to reduce that by 50%. Obviously, when you're locking everything down, that obviously helps. And then food products in stores have become more expensive, while obviously incomes have decreased. If you remember those earlier slides about a lot of people living on savings, so many people have lost their jobs. So the food shortage is another, it's a common theme, of course, in this entire thing. So we don't have a second slide on this one.
Yes, I think it was really interesting to see. So we have two partners in Ghana, and one of them is Redavia. And I think what's really interesting to see, so Redavia as well as Candy, their business model is they sell, basically, for example, solar rooftops, so a large roof full of solar panels, to SMEs that need electricity, and they're able to provide that at a lower cost than the normal grid. And as Lucas already mentioned, also in Ghana, the grid is quite unreliable. So imagine you have a company and you have dairy products, and all of a sudden you don't have any electricity for 4 hours, and you have all these products that you need to put in refrigerators. Then electricity is of huge importance. So what's interesting here is that we actually saw that they were able to offer this electricity, basically cheaper electricity at a time where companies needed to cut costs, and a lot of companies were interested in this. So I think in general in C&I, so commercial and industrial, and a lot of these, this is like the bigger sort of solar rooftops. They actually had a higher demand, and they were able to sell quite a bit to these companies because it was so essential to cut costs. And then of course, if you do that in, for example, with also temporarily cutting the cost by 50% because the grid was doing that, you all of a sudden you have a solar rooftop, you have cheaper energy, plus it's green and it's more reliable. So I think that was really interesting to see. Then we also have our partner MBF, who gives a lot of trainings actually in Ghana. That was of course very difficult because of the lockdown, and it wasn't possible.
Right.
But then I think for them it was a good opportunity to move to online training, so they actually started doing that. And then now, when things have started to open up a little bit more, they were also able to restart giving physical trainings. So it's interesting to see. I think especially if you look at Ghana and these industries, that it can actually be a very interesting period, and with a lot of opportunities. But it really depends on on a lot of different factors, and you just have to be.
But again, that thing that we previously talked about, which is the sometimes the consequences of this, you don't know what it's going to be, but some of these companies kind of branching out into other sectors. And one of the consequences being that if you're in a pandemic and you are realizing that cutting costs is something you need to do, and then if you see somebody like a Redavia or a Candy and you're saying, well, hey, I might have been thinking about getting with one of these companies to supply us with solar power, maybe I'll just go ahead and take the leap now because we do need to cut costs and this is a way to do it. So that's definitely, I think, a positive for those companies and those industries in general. And then now I think India is the last one. So yeah, I mean, I think India definitely, a lot of media attention, I think, on their situation. So economic activity accelerated in September, returning almost to pre-lockdown levels. Their economy, though, will likely shrink 5% in the year through next March. Transferred cash to 200 million women. I tried to find the number on that, but it was a bit conflicting on how much they gave each woman. But this definitely helped reduce hunger and poverty, because I think they've made so much progress, with a lot of initiatives in India, that what they didn't want to have happen is this pandemic comes and it just pushes everything backwards. So that was a big step for them to try to, mitigate the impact of that. And then, nearly 1 in 4 residents in Delhi have contracted the virus. So I think you're looking at these types of places like, New York City, where you just have so many people in one place, and even more, of course, I think in Delhi with that, the density there. It's just going to be difficult anytime something like that happens. So I don't think that. Yeah. Okay. So here we have the next slide.
No, I think India. So we have our field partner there, Milap, and I think India was very severe in terms of the amount of cases. The lockdown, it was a pretty severe lockdown, and I think still most people are working from home, mostly staying at home. There's very limited movement. Then one thing that happened is that it also started to spread into the rural areas, and in rural areas you have very limited health facilities. So it's so I think the impact there in general it's very rough, and they gradually moved from a total lockdown to lockdowns per region, so that means it also depends very much on the region, and Milab works with field partners in different regions, so results sort of vary. One thing that was a bit of a struggle is that this bank moratorium that we talked about earlier was initially for 3 months, but then extended for another 3 months. So they basically told people you don't have to repay any loans for 6 months. So imagine not having any income for 6 months. So what Mila did is they have a very good relationship with their field partners. They had conversations about sort of the ability to repay, and they really tried to, for every partner, depending on their situation, to come up with a model of repayments. But of course, in the first couple of months, there were very little collections. They also mentioned that a lot of their end clients just basically got out of right above that poverty level, and now we're on the brink of going back into this very tough situation and below the poverty line.
Yeah.
So I think our investors, probably a lot of our investors are invested because Milap is a big partner for a long time already. Have received updates on Milap. I think now they're collecting a lot more from these field partners. At the same time, you have to be a bit cautious with dispersing new loans, and it also depends on, are you able to physically go and collect or give loans to people. So so we're keeping a close eye on them. I think we're talking to Milap almost on a weekly basis, and I think soon more updates will follow.
Okay, I guess that was all right. So Cambodia is the last one, because I want to touch on what he just said about that reporting process once we finish with Cambodia. So try to quickly go through this. So GDP grew by 7% in 2019, projected to shrink by as much as 5.5% this year. An additional 1.3 million Cambodians will be put into poverty as a result of the pandemic. And the country did not reach a stage requiring a partial or complete lockdown of the country. So good health-wise again, but then again, of course, we see that same thing of economic consequences for everybody. Nobody is untouched. And then I think, these are your points.
So in Cambodia, a lot of people self-isolated. So even though there wasn't an official lockdown, people took it very seriously. I think problem there is that Cambodia is very famous for basically for the garment sector. So they do a lot of cut, make, trim is what they call it. So it's basically so it's the unfinished products and then finish it before they're being sent out to all these different retail stores all around the world. And of course, I think everyone saw that there was a huge drop in demand for clothing, and everyone's just sitting at home. And that also means that I think these bigger, maybe H&M and Zara, they canceled a lot of orders because there just wasn't any demand, and that had a huge effect on that industry and on the economy, as well as of course tourism. And I think one thing that because we have a few partners in Cambodia, and we also talk to other ones. And one thing that kind of surprised me is that if you look at farmers, a big part, or sometimes they use the income from their children, or like adult children, basically, that have an own job.
I'm glad you clarified that.
Yeah. So they have, let's say you're 60 years old, you're a farmer, your daughter is 40, she works in the garment industry. Then they might get a loan to buy seeds, but then repay that with the income from their daughter's salary. And now all of a sudden, if her daughter is not making the same amount of money, then that's a little bit more difficult. So there's also quite a big indirect effect on the economy. I think if we talk to a couple of the microfinance partners we talked to, they were saying that right now, so the worst thing you can do is to completely cut funding because people really need it. So I think a lot of them were really supportive and really looked at what is the situation and what do people need. Because if you're an impact company, there's more than just getting repayments. It's also about, same for Milab, making sure that people have the prospect of a better life, and you don't want to just in 3 months take that away because of a pandemic.
Yep. All right, good. So I think these last slides, we just kind of had a bit of other information. I won't go through this too much because of the time factor, but I think it's basically, if you look at the consequences on the emerging markets in general. If they were to have a larger outbreak where it was actually much worse, it would still be quite a disaster there, because the healthcare facilities, while they are prepared for pandemics, they're not prepared for the type of large scale outbreak that can happen with a COVID. I mean, if you look at Ebola, Ebola outbreaks don't happen with these mass numbers of people, because it's you lock down these couple of patients and then you're hopefully able to kind of contain it. You're not talking usually millions and millions of people that require ICU for long periods of time. So I think it's very important, of course, that they continue to be aggressive and try to keep that under control, because as you see in this stat, the amount of hospital beds that are available, it's much more limited compared to the numbers that we have available here in Europe. And then the next one is, so 1 in 6 children are not enrolled in school. At least 1 out of 3 school children have been unable to access remote learning. 5.3 million students in sub-Saharan Africa may not return to their studies, which would be a disaster just on its own. And then the crisis has put almost 37 million more people into extreme poverty. So, I mean, these are all things that these are real people, dealing with these situations. And obviously, we don't have to tell you guys that much, because like I said, I think the crowd has been very resilient, which shows you that people still get it. People still understand that these are real people suffering these economic conditions. But I think really good to get a lot of these updates, just generally on the markets, to see what the situation is there. Also, some of these specific, I think, impacts on certain investees and what their sector is, what their business model is, things like that. But also, I think, again, the same theme as last time is that a lot of the stuff that you heard, if all of our investees were in Europe and we were giving you the same presentation, it probably wouldn't have sounded, that much different, in the sense of, companies trying to make their repayments and what, situations that they're going through. It is a global pandemic, so everybody's kind of going through this stuff. The one thing that I thought was important that would probably, hopefully answer some of people's questions is, you did mention, so with Milab, you guys are having conversations every week.
Yeah.
A lot of these partners, I'm sure you're having other conversations with that regularly. And so I think a lot of you guys, obviously, if you're invested in projects where we get updates like this and it's consequential to let you know, I think you get emails from Peter Stolze, our COO, where he, kind of explains situations to you. We always try to be, transparent when it comes to if the investee is going to have problems. And, we always try to keep you guys in the loop as best we can. Peter does a great job with that. But I just wanted, because since you are the lead on the portfolio management and the monitoring, I just hoped that you could maybe explain to people what that monitoring process looks like. So when you say you are keeping track of a situation, what does that actually mean in your work day of how you're getting the information? How often are you getting it? What does your relationship look like with these investees?
Yeah, no, I think that's a very valid question. So the way we normally do it is we have a quarterly monitoring schedule set up. So our partners are able to basically on a quarterly basis to upload their management accounts or their financial statements for the last quarter, as well as the number of covenants and KPIs. So on a quarterly basis, we know what's going on, and then based on that information, we have regular calls with them and to get a little bit of background information and know how they're performing. As soon as COVID hit, what we decided to move to a monthly monitoring, so much more frequently. We set up a survey, an online survey for our partners to fill in. We tried to keep it a little bit light because, of course, all these companies had a lot on their mind, and we don't want to overburden them with additional reporting requirements. But on a monthly basis, they fill in a couple of key KPIs, and then also a little bit of more qualitative information on how the situation was in the country and how they've been affected and what they expect for the rest of the year. And then, as you saw the projects on the website before, basically at the end of every month, we go through all those companies and all that information again to decide if we're basically if we'll allow them to go onto the platform.
Right.
So if we get any red flags, we'll first deal with that and talk to the company and see if something is going on.
So that kind of monthly reporting, that's like the high level. You then kind of analyze all that stuff, and then if you see red flags, they may have already given you some extra guidance as to say why that is. And then if they haven't, you go ahead and contact them directly and say, hey, could you explain this? Can you tell us what's going on with that? And then you guys are monthly making decisions to, reevaluate companies to make sure that you still think it's a good idea to have them have projects on the platform.
Yeah, exactly. And I think, that's mainly something we did now for COVID. We'll have to see once everything stabilizes a bit more what the way will be going forward. And I think especially because we're always trying to keep into account that we want enough information to make sure that we know what's going on. We will still have those frequent calls and check-ins, and often there are also email updates or quarterly reports from our embassy. So we do get quite a bit of information. We also want to make sure that their main focus is their business, and I think it's easy to forget that we're often one of their lenders. So if you have 6 or 7 different lenders with different requirements, a lot of time goes into the reporting. So we always try to find a balance to make sure that we have enough that we can offer, the crowdsourcing entities that we know what's going on, but also that it's not too much of a burden on them.
And then my last question before Lily pops in with what she's going to say is, and so you would then, if you get, red flags, you get explanations, stuff like that. If you get to the point where you think, hey, we have some worries maybe about this investee, that's when you would go to Peter Stolze, involve him and kind of talk about how you're then going to update the crowd and these types of things, correct?
Yeah, so normally so I think the initial chats are often, for example, it's me or it's one team member talking to them. Then we have weekly discussions, with the team on all these different partners. And then if we really think something is going on, we discuss it more broadly. We might have more calls or maybe even with shareholders. And then basically once we make a decision or once we do have an update that is worth sharing, because of course you don't want to share every single discussion point, then we tell it to we tell Peter Stolze, and then he informs the crowd.
Okay, awesome. Lily, you wanted to say something?
Yeah, adding in the question from Paul came in. Do you observe that your clients are able to manage their cash flow and project for, say, 3 to 6 months in advance?
Yeah. So that's actually something we've been looking at a lot the last couple of months. I think if you look at some of our some of the email updates and the companies that are now in arrears or delayed their repayments. They weren't able to manage it effectively because they didn't have enough income. And for example, if you look at at India at that point, they didn't have any income for or almost no income for a couple of months, and then it slowly went up again.
Right.
So of course they weren't able to, in that situation, effectively manage their cash flow. But then we're trying to get to a situation where they are and start repaying again. And that's what we do with all investees. But at this point, during those basically those monthly check-ins, that's definitely something we look at.
And we still have the question from Per.
Yeah.
About, how many investees in total?
Yeah. So I have the details here. This is checked at the beginning of August. So at that point, we had 25 partners that are active on the platform. And we had, I think, as of now, there are 7 that are in arrears, so that haven't been paying on time. So it's a bit of a, this is capturing the moment. I think we just last week or the week before, right, at least the last 2 months, we added 2 additional investees. We'll have to see how the situation develops. But as of now, so affected, I think a lot of our portfolio companies are affected to the extent that they cannot make any repayments. Right now, that's 7 companies.
And most of them due to COVID.
So I mean, a few were already in there, but yeah, I think the new ones, a lot of them, it was mostly COVID.
Jeroen, I just saw your comment about the Salto soup. Feel free to bring us that if you would like, if you really think we deserve it. We won't stop you. I don't have any more specific questions for you, Thomas, and I don't see any more here in the chat or in the questions. Thanks for all the thanks on the audio once we finally got that fixed. I think the problem was that the audio was coming from Lily's built-in input mic, and her fan on her computer is running quite loudly. So when that was right next to the mic, I think that's what the rain sound was. So I was thinking this whole time, unsure, because I've had that PowerPoint up on my screen, not sure if the audio was any better. And now I think seeing these comments, it's like, whew, let some of that tension go. All right, well, I don't see any more last minute questions. So Thomas, thank you so much for your time today.
Thanks for having me.
I know you're a busy guy. I think you answered these questions great. Some of them, I think, a bit difficult. Thank you to everybody who attended. We had 94 people. I think you can see that yourselves in the bottom, but that is so far the largest attendance we've had of any webinar. So
on Monday morning.
On a Monday morning at with the technical difficulties and all. So thank you so much for registering and attending. Like we said, you will get the recording sent to you, and then we will also put it on YouTube. I'm not sure when we'll do another update, regarding COVID specifically, because like we said the last time, we want to make sure that we give it enough time to where we actually have consequential information to give you guys an update. But we want to be doing more webinars, like this, of other topics, things that you guys are interested in, that you want to have more information on, whether that's the investments or the product, whatever that is. So feel free to, like we said before, send us an email at info@lendahan.com anytime you have an idea or just feedback on anything in general, or something that you want to see us do another webinar on. Thank you, Lily, for being our wonderful producer today. A little mini round of applause for her great work. And also thank you to CIC Rotterdam for letting us do it here. Really appreciate you hosting us here at this lovely podcast studio that we finally figured out how to work. So, all right, guys, thanks again for joining, and have a good rest of your day and good rest of your week. Take care.
Thanks. Bye.